Hello and welcome to Advanced Audit and Assurance Practice to Pass session for September 2018 examination being organized by ACCA Pakistan. I am Kashif Kamran, your tutor for this session. I would first like to formally introduce myself before starting on with the Practice to Pass session. I am Kashif Kamran, a fellow chartered certified accountant. I have 11 years of teaching experience and I'm currently associated with the Bani School of Accountancy, which is a platinum approved learning provider of ACCA in Karachi, Pakistan. I am currently teaching the Advanced Audit and Assurance paper and the Strategic Business Leadership paper. Okay, I'm currently teaching the Advanced Audit and Assurance paper and the Strategic Business Leadership exam. One of my distinct feature of teaching is my exam-focused teaching style, and my students have attained Pakistan-wide and UAE-wide positions in the prior Advanced Audit and Assurance examination. Now, we are all meeting today for the start of the Practice to Pass session, which is for September 2018 examination. The agenda of this Practice to Pass session over the next 4 days, starting from today. Today, our focus will be on audit risk. Followed by that, tomorrow, our focus will be on evidence and procedures. Then on the third day, our focus will be on ethical, professional, and quality control issues. And then on the last day of this Practice to Pass session, our focus will be on reporting. Now, before starting on with the agenda for the day one, which is audit risk, I would first like to clarify the objective of this Practice to Pass session. The objective is to help you practice in exam context. I will be doing exam drills with you on each of the 4 days on different diversified core topics. Considering the do's and don'ts of each core question which comes in advanced audit and assurance exam, along with emphasize on the marking scheme, because to me that is very, very important to ensure you are not writing more or less and completing 100% paper on time. So over the next 4 days, I will be guiding you how to practice the core questions and the core topics. Along with that, I will also be emphasizing on the marking scheme because a lot of time I believe students are not aware of the marking scheme. So either they're writing less or they are writing more. Now, the very first thing I need to tackle today in the Practice to Pass session is a very, very important change. Starting from September 2018 exam, the paper format for Advanced Audit and Assurance examination have changed, and all of you should be familiar with the paper format, with the new paper format. Now, the new paper format, the question paper for Advanced Audit and Assurance exam has now become all compulsory paper, all compulsory paper. There is no choice in the paper. You have 3 questions in the Advanced Audit and Assurance exam, and you have to attempt all the 3 questions. There is no choice starting from September 2018 examination. Okay, let me emphasize on it. Now, as per the new format of the exam paper, the section A contains 150 marks question. and the section B contains two 25 marks question. So in the section B of the paper, you will see two 25 marks question. So the paper format has now become very organized. You have 3 hours and you have 3 questions. So technically, no one should complain of the time management issues facing the new format of the paper. Section A contains one 50 marks question and section B contains two 25 marks question. Examiner has given a very clear guidance on what can come in section A and what can come in section B. Let's have a clear understanding of it. In the section A, risk assessment, ethical, professional, and quality control issues, and even the practice management. The practice management means procedures. The practice management means evidence. So, examiner will start the question 1 as he used to start previously. The emphasis of the question 1 will remain risk assessment. The emphasis of the question 1 will remain planning. But then again, in the question number 1, as we used to see in the prior exam settings, the question 1 used to be diversified. The question 1 includes procedures. It will still include procedures. Yes, the question number 1 in the prior exam setting used to include ethic, ethical issues. But now with the new format of the paper, examiner will include in the question number 1 not just the ethical issues, examiner will also include the ethical and professional issues in the first question. So technically, when you look at the previous question number 1, which used to be of 35 marks, and now when you look at the new question number 1, which is of 50 marks, technically there is an increment of the 15 marks. But honestly, the way the question was structured is still the same. You still have a risk question in the question number 1. You still have a risk part in the first question, right? You still have a part allocated to procedures, and you still have a part allocated to ethical and professional issues. Yes, the examiner will increase the marks on procedures and on ethical and professional issues. Examiner can even test your knowledge in the question number 1, as the examiner has done in the past papers. Examiner do ask to write additional information in the question number 1. Examiner can still ask to write additional information in the question number 1. Examiner can even ask knowledge questions in the first question. Examiner usually ask using the work of others, that how would you place reliance? How would you place reliance on using the work of internal auditor? Or how would you place reliance on using the work of a component auditor? Or how would you place reliance on using the work of an expert? So technically, the question number 1 is now of 50 marks, which also includes the 4 professional marks, right? So in these 50 marks, there are still 4 professional marks. And the 4 professional marks are still the same as with the previous format of the paper. That is to write a briefing note. You will still be writing a briefing note in the new paper format. So the briefing note requirement still remains the same as from the previous exam settings. So 4 professional marks have been allocated to write a briefing note. Now, when you come to the section B of the paper, which is basically the 225 marks question. Now, one of those questions will be on reporting and on the completion stage of the audit. One of the question will be on completion and reporting. That is must. So reporting will now become mandatory because in the previous paper format, student used to either choose reporting. There might be number of students who used not to do reporting in the previous paper format, and there might be students who used to do it. But now it has become mandatory. So when you look at the question number 2 of 25 marks, the question number 2 of 25 marks will be on completion and reporting. So examiner can give you in question number 2 something about evidence because that is the completion stage. the review of the working paper. You must remember the typical question of the examiner, which used to come in the past paper. Comment on the matters and explain the evidence you should expect to find in the working paper file. Now that was a question which usually come at the stage of completion. So examiner can come back with the typical evidence question because that really fits the definition of the completion stage. Yes, the examiner can even bring a question on quality control at a completion stage. In the last many sittings of the advanced audit and assurance exam, examiner has tested many professional and quality control questions on the completion stage of the audit. So examiner can bring them back in the question number 2. But yes, most of the marks in the question number 2 will be for reporting. Even if you have seen the specimen exam, in the specimen exam, the question number 2 contains 15 marks for reporting and it contains 10 marks for completion. So examiner will give you more marks for reporting because technically that has to be the main question. But examiner will deduct some 7 to 10 marks from the 25 marks to give a question on completion as well. So you cannot expect a complete 25 marks question on reporting. Some of the marks will be taken from reporting. Secondly, question number 3. The question number 3 can be on other assignments because the examiner says syllabus area E and syllabus area F will only come in section B. So syllabus area F is other assignments. Now we know other assignments never come on a regular basis in the advanced audit and assurance exam. It is not like that you find other assignments in every single exam sitting. But yes, the examiner, if the examiner wants to test the other assignment, examiner will test the other assignment only in section B, right? Not in section A. Because examiner is very clear, right? Examiner is saying the syllabus area E and the syllabus area F will only come in section B. So syllabus area E is completion and reporting and syllabus area F is other assignments. So examiner is very clear on that. So what is the paper format for you appearing in September 18 exams? You have 3 hours and you have 3 questions. Every question is compulsory. You have no choice. The first question consists of 50 marks and that will be one case study, right, of 50 marks, and one case study of 50 marks will have requirement A, requirement B, requirement C, requirement D. Right. So there will be 4 requirements or 5 requirements to one case study, and that one case study will be of 50 marks. Then in the question 2 and question 3, which comes in section B, they will be smaller cases, right, in comparison to a 50 marks case study. Now that is the paper format, right? Now I just want to show you the real interface of the specimen exam, which has been uploaded by ACCA, and I hope all of you have seen the specimen exam because you have your exam coming Monday. So let's see what a specimen exam look like. If I show you the specimen exam just for a sake of analysis quickly, because I need to focus on audit risk, but I just want to spend 5 to 10 minutes understanding the new format of the paper. If you look at this specimen exam in front of your screens, this is the specimen exam which is applicable from September 2018 exams. It says all 3 questions are compulsory and must be attempted. And you have the same time duration, which is 3 hours and 15 minutes. Now, how would you be utilizing this 3 hours and 15 minutes? I will be making a proper structure of that on the last day, which is the day 4 of this webinar. Now, if you go down and you look at the format of the paper, it says you are a manager in Dando and Company, a firm of chartered certified accountant responsible for the audit of the Adam Group, a listed company. The group operates in the textile industry, buying cotton, silk, and other raw materials to manufacture a range of goods including clothing, linen, and soft furnishing. Goods are sold under the Adam brand, which was acquired by the group many years ago. Your firm was appointed as auditor in January 2016. You have been provided with the following exhibits. Now that is a big change, right? Now in a question number 1, you will see exhibits. Exhibits are like annexures, right? So you will see 4 annexures as per the specimen exam. There is an exhibit 1, there is an exhibit 2, there is an exhibit 3, and there is an exhibit 4. Now, when you look at the first exhibit, it says the first exhibit is an email. Now, if you remember the previous paper format, in the previous paper format, the question number 1 used to be in a format of an email, and the partner used to do the email to the manager, and the partner used to delegate some work to the manager. So it is still the same, right? It is still the same that you're getting an email from your engagement partner. So this email has been received. This email has been received from Joss, and Joss is our partner. So Joss is our partner. Now the exhibit 1 will be the email, right? So that means the email, that means the exhibit number 1 is an email, right? So that email will contain the requirements. So when you read the email in the exhibit 1, so you will get to know what I should do in part A, what I should do in part B, what I should do in part C, and what I should do in part D. So from where will you get to know the requirements of the question? From the email of the partner, which is the exhibit number 1. Then in the exhibit number 2, you have the information, which is very important. You have the information about the group. Now we need that information, right? We need that information to identify risk. We need that information to identify, we need that information to identify ethical and professional issues. We might be needing that information to identify procedures. So information about the group is given in the exhibit number 2. Then in the exhibit number 3, which is very, very important part of a question number 1, the exhibit number 3 contains extracts of the financial statement. We know that the question number 1 can never be without extracts. That was even in the previous paper format. So examiner is giving you the third exhibit for the financial statements. And the fourth exhibit is the notes from the meeting. The fourth exhibit is the notes from the meeting. Which meeting? The meeting held between Joss, Joss is your partner, the meeting held between Joss and the finance director. And obviously that notes from the meeting will be very important because Joss and finance director must have discussed some very important issues which could be important to you in solving the question. So the first exhibit is an email, right, which will contain the requirements. The second exhibit is the information about the company. The third exhibit is the extract, and the fourth exhibit is the notes from the meeting. Right? So exhibits are basically annexures. Now, if you go to the next page, you will see the exhibits. On the page 2, see the first exhibit. In the first exhibit, you can see there is an email from the partner. Now, the email from the partner is just like the previous question number 1, right? I hope you can see this interface of the question of the exhibit 1, and you can say this is exactly like the previous question number 1, which used to come in the June 18 exams. So you can see the same email, right, which used to come in the first question of the old format. It says to the manager from JOS, subject is the audit planning. And then the email is being written by the partner. So the partner is saying hello, and the partner is saying, I require, just like the previous question number 1, I require you to prepare a briefing note for my use. So just like the previous paper format, the partner wants you to prepare a briefing note for his use, which contains 4 marks. Then what you should be doing in a briefing note? What you should be doing in the briefing note? Evaluate the audit risk. So that's the first requirement. So just like the previous question number 1, you have to evaluate the audit risk, and your evaluation should utilize the analytical procedures. So now you can see the requirements, right? So that is like a same question number one you used to see in the previous format. And in the in the part B, you need to explain some matters. So part B contains explain the matters, considering to rely on the work of Clapton. Clapton is a subsidiary auditor. So what matters will I consider relying on the work of Clapton? That is for 8 marks. Then in the C part, the examiner wants me to write procedures. That is very typical in even with the previous format of the paper. And then in the D part, examiner wants you to identify ethical and professional issues. And the examiner is very particular, right? Examiner is saying using the information in the exhibit 4. So examiner is saying you using the information provided in the exhibit 4. That means exhibit 4 has only been given in this question for ethical and professional issues. So it is very simple that if I go down and see the exhibit 4, I will be assured that this exhibit 4 has been given for identifying ethical and professional issues. I will not be using the information of the exhibit 4 in the part A, B. I'll be using the information of the exhibit 4 just for the requirement number D, because the requirement number D says using the information provided in exhibit 4. So exhibit 4 is only for the D requirement. Identify and evaluate any ethical and professional issues. So the format is very same to the previous question number 1. The only thing is that the examiner has divided the information into 4 exhibits, into 4 annexure. Annexure 1, exhibit 1, exhibit 2. See, exhibit 2 is about the information of the company, and in the information of the company you need to find the risk or procedures. I hope you are familiar with this question, Adam Company. This is the previous question. I think this question has come in June, somewhere in June 2014, and this has been put into the specimen exam. So see, the exhibit 2 contains information. See, exhibit 3 contains the financial statement, and that's normally the part of the question, right? That question number 1 contains financial statement. So examiner has just segregated the information. That one exhibit deals with one information. So I think it has become more easier for us to identify things, because we know the exhibit 1 contains an email, the exhibit 2 contains the information, the exhibit 3 contains the financial statements, and the exhibit 4 contains the notes from where I have to identify the ethical and professional issues. So I have 50 marks, out of which 4 marks are professional marks. And I have to do a simple question as I do in the previous exam sitting using a briefing note format, right? And the examiner has written it very clearly here, right? See, this professional marks will be awarded for the presentation and the logical flow of the briefing note. So there are 4 professional marks, and there are 46 marks which relates to the email which came from the partner. Then the section B is typical, right? Section B is again the type of section B you used to see in the past papers, old past papers. The section B is a typical looking questions. You have a simple question, question number 2, and you have the requirements, just like a typical question which has a case and a requirement. And then you have a question number 3, and a question number 3 also have the requirements, just like a normal question. So this is a specimen exam, right? And you have exam paper on coming Monday. So you should be assured that you have thoroughly studied the specimen exams. That is fine. The specimen exam contains all the old past papers, and they have been brought into the new mode of exam paper. But you should go through the specimen exams to know how things have been placed. So you should be familiar with the interface of the new paper format, so that you do not face any challenge on Monday, the 3rd of September. Okay, now that was the time I plan to allocate on the new paper format, so that at the beginning of this practice to pass session, you have a very clear structure on how to go about with the new paper format. So now I'm starting with my day one agenda, which is the agenda to solve a question on audit risk. So let's start the audit risk question and let's see how to solve a question on audit risk. Now the question I have chosen for audit risk is December 15, question number 1, and audit risk is very probable for coming in September 18 exams. So please ensure that you give proper time and proper weightage to audit risk and practicing audit risk, because audit risk is very, very important for September 2018 exam. Okay, let's start on with our exercise on audit risk. Okay, now that's the first day agenda. In the first day agenda, I will be doing live question in the session, that is December 2015, question number 1. And for your home assignments, there are 2 questions already uploaded in the document section of the webinar, which is June 17, question number 1, and June 15, question number 1. So I will be doing a drilling of December 15, question number 1, so that you have an idea how to write it. Okay, let's start with the understanding. Okay, there are some questions which I would like to address first, which is coming from the attendees before starting on with audit risk. Uh, first of all, Hamad Salim, is there any article relating to audit risk? Examiner, if you have recently visited the Advanced Audit and Assurance page on the ACCA website, there are 5 articles. There are 5 articles which have been on the exam techniques. Examiner has written an article on exam technique for risk. Examiner has written an article on exam technique for procedures. Examiner has written an article on exam techniques for reporting. Examiner has written an article for exam techniques on ethics. An examiner has written an article on exam techniques for accounting issues. So please ensure that you see the first 5 articles, on the ACCA website, which are all very, very important because they have been written to address the student. How a student should write a risk answer, an ethics answer, an answer on procedures, or an answer on accounting issues. So examiner has given proper guidance article which you should be looking for. And I think just today or a day before yesterday, there are 2 new articles which are not current issues article, which are articles on how to write a good reporting answer and how to write a good procedure answer. So please ensure you do read those articles on how to write good procedures, how to write good reporting answer. That is very, very important. Okay, secondly, business risk is not the today's agenda, right? Business risk came just in the last exam sitting, June 2018. So it is not at all important for September 2018 exams. I'm focusing on audit risk because that is important. Every topic I have chosen and every question I have chosen is for the reason that it is important for September 2018 exam. So I'm not focusing on things which have come in June 18 exams. So I'm focusing on things which looks high likely for September 2018 exams. Okay, and one more important thing, right? Because now I'm starting a question on audit risk. So I will be focusing on drilling an audit risk question. So if you have any questions, please ensure that you after every 1 hour I will give you a 15 minutes of a question and answer session. So currently it's like 9 p.m. Pakistan Standard Time. So at 10 p.m. Pakistan Standard Time, I will give you a 15 minutes question and answer session so I can Consider your questions and answer your question. Because currently for next 1 hour, I'm going into an exam paper and I'm starting drilling an exam paper. So if you can just hold your questions and focus on the drilling for audit risk. So I can concentrate on the drilling and I'll come back and give you a time to raise questions. And that would be much better, right? Because I can interact with you very clearly and very effectively. Okay, and a lot of students are asking for break, right? The first break in the session will come approximately 45 minutes from now. So it will be 9:45 p.m. the Pakistan Standard Time when I will be giving the first break in the session. So you have to wait for 45 more minutes for the first break to come in. Okay, let's start on with the session. Now, when you get a question on audit risk, you have to be very clear that how you are utilizing the question on audit risk. Now, let me illustrate that very effectively for you before I put a live question in front of you and start demonstrating my answer. Okay, just a minute, right? And I'm coming back with the session. Just 1 minute. Okay, look, let's start on with the question on audit risk. Okay, now try to understand something which is very important. When you get a question on audit risk in exam paper, there are two types of requirements which comes on an audit risk question. There are two types of requirements which comes on audit risk, and you have to be familiar with both the requirements to know how will you allocate marks. Now, the first requirement which comes on audit risk question, the requirement number one, is a very simple requirement which simply says evaluate the audit risk. Evaluate the audit risk, and the question continues. Question mark. And suppose the examiner gives you 18 marks for it. Then there is a second requirement which has come oftenly, which says evaluate the audit risk. Evaluate the audit risk, full stop. You, your evaluation, your evaluation should your evaluation should include, your evaluation should utilize the analytical procedures. Your evaluation should utilize the analytical procedures, question mark. And the marks are again 18. Now, both the questions needs a different strategy to be attempted. When we look at the first question, which is simply saying evaluate the audit risk, 18 marks divided by 2 marks and 2 marks per risk, and I have to write 9 audit risk. So every risk is worth 2 marks. Secondly, when a question comes evaluate the audit risk and your evaluation should utilize the analytical procedures, then the marking scheme is different. Now, to utilize the analytical procedures, I will just show you what does that mean. Utilize the analytical procedures contains maximum 5 marks. Deducting from 18 the 5 marks, I'm left with 13 marks of audit risk. Now that means for audit risk, I have 18 minus 5 is equal to 13. I'll divide 13 with 2, so I should be writing 7 audit risk. Now, utilize the analytical procedure whenever that requirement comes in. You have to be very specific that utilizing the analytical procedure, the examiner marking scheme is very clear. In the examiner marking scheme, it is very clearly written that you have maximum 5 marks for utilizing the analytical procedures. What exactly that means, utilizing the analytical procedures? When you look at utilizing the analytical procedures, examiner says when you utilize the analytical procedure, when the examiner is specifically asking for it, then the examiner is saying, I have dedicated 5 maximum marks for utilizing the analytical procedures. But how should you do it? Examiner says in the marking scheme, if you've seen the marking schemes of these questions, the examiner says in the marking scheme, for each ratio, for each ratio calculated with comparative, for each ratio calculated with comparative is equal to 1 mark. So if you calculate a ratio with comparative, you will take 1 mark. So that means if I have to utilize the analytical procedures for 5 marks, then that means if I calculate 5 ratios with comparative, I will take 5 marks. So for each ratio calculated with comparative, I will take 1 mark. So examiner is emphasizing on calculated, right? So each ratio calculated with comparative is 1 mark, right? So that means if I calculate 5 ratios with comparative and show results to examiner, I will be taking 1 multiplied by 5. I will be taking 5 marks. You have to show them, right? You have to show them in like a table form. So you will take the table form and you will show examiner ratios for both years. I'll be illustrating that, right, shortly, how to go about it. Now, then when you come to the audit risk, for example, if you can convert a result of a ratio, if you can convert a result of a ratio into audit risk, if you think there is a result of a ratio which itself is justifying an audit risk, then if you convert the result of the ratio into audit risk, you will be scoring 2 marks, because every audit risk is worth 2 marks, whether the audit risk is coming from ratios, whether the audit risk is coming from accounting treatment. So from wherever the audit risk is coming from, when you justify the audit risk, you will take 2 marks. So to calculate the ratios, you will take 5 marks, right? When you convert any ratio to risk, you will take further 2 marks. So only the results of the calculation, right? Only the results of the calculation will give you 5 marks. And then after that, you will write a table of, you will write risk, audit risk. For example, suppose you're writing a question on audit risk. You will first tell examiner results of analytical procedures like this. Results of analytical procedures for 2 years, 2017 and 2016. And you calculate any 5 ratios, like you calculate a gross profit margin, or you calculate a net profit margin, you calculate the current ratio, you calculate the receivable days, you calculate the gearing ratio. Now, which ratios will you calculate depends upon the data. At times, the examiner gives me a full balance sheet. If the examiner gives me a full balance sheet, then I can calculate many other ratios. And if the examiner gives me a summarized balance sheet, I cannot calculate many ratios. So which ratios should I calculate depend upon the numbers given. Can the numbers help me in calculating gross profit margin? What if the examiner has not given me gross profit? Then I cannot calculate the gross profit margin. So then you have to choose which five ratios will you be calculating based upon the data given to you. Now, once I show this table to the examiner and giving answers for both years, giving answers to both years just like this, by the end of this table, where I'm ending the table, by the end of this table, I've taken my 5 marks because the examiner is saying for each ratio calculated with comparative. He's not saying commentary of the ratio, right? He's saying for each ratio calculated with comparative, I'll give you 5 marks. So just by showing the calculations, of the ratio in both years, I've got my 5 marks. Now, if I think that If I think that the current ratio can be converted to an audit risk, then I'll put the heading current ratio and I'll tell examiner that because the current ratio has fallen from 1.8 in 2016 to 0.8 in 2017, this indicates that there is a material uncertainty. There is a material uncertainty. There is a material uncertainty relating to the going concern of the company. There is a material uncertainty relating to the going concern. If the management, if the management does not give adequate disclosures of the material uncertainty, if the management does not give adequate disclosures of material uncertainties facing the company related to its foreseeable future, the financial statements could be materially misstated. So that is where I'm taking my further 2 marks. The ratio gave me 1 mark, but I converted the current ratio into like a material uncertainty relating to going concern. Because if the current ratio falls below 1, that is a very major liquidity problem. Your ability to pay, have been tested. Secondly, secondly, um, I think the receivable days have increased a lot. So I'll put my next heading and I'll say receivable days. And I'll say the receivable days has increased from 70 days in 2016 to 92 days in 2017. This shows that the customers are struggling. This shows that the customer are struggling to pay on time. This shows that the customers are struggling to pay on time or is taking more time to pay. There is a risk that there could be more irrecoverable debts. There could be more irrecoverable debts. There is a risk that there could be more irrecoverable debts, which, if not recorded, could overstate the receivables, and profit and understate expenses. See my answer? I hope you're getting my point of view here. The marking scheme is very clear, very specified. So when you use the results of the ratio, the results of the ratio will give you 5 maximum marks. But if you can convert a result of the ratio into a risk, you will take further 2 marks. But even if you're not converting the results to risk, you've still got your 5 marks, right? Because the risk in the question is not only confined to ratios, right? The risk can come from the whole case study, which has been given by the examiner. There might be so many accounting treatments in the case, right? Which can help me identifying the risk. There is not just one source of a risk, right? Which is ratios. The risk can come from so many sources in the case study, which I will just be illustrating. Munib Askar, examiner never asked for comment on the analytical ratios. You're not doing an F7 paper, right? Where you have to do a commentary on the ratio analysis. This is an advanced audit and assurance paper. You are just showing the results of the analytical procedures. And then if you are capable of converting the results to risk, that is very good because you are an auditor. So for an auditor, the ratios are important to identify risk. You're not doing a commentary, a journal commentary on risk, journal commentary on ratios. You're not an accountant. Okay, so this is one type of question, right, which comes in past paper where the examiner purposely says utilize the analytical procedure. So when you see this in the exam paper, utilize the analytical procedure, then you have to deduct 5 marks from the total marks. And then you have to show a table to the examiner where you utilize the analytical procedure. So this table basically, this table in front of you is basically the utilization of analytical procedures, right? And this table has 5 marks. Then under the table, you can start writing your audit risk. You can give a heading of audit risk here, and you can start writing audit risk here. And the way you want to go down. How many audit risks we need to identify? Do you need to identify 7 audit risks? So for example, we identified 2 of them from the ratios. Now that means we need to write 5 more. But if a question comes like this, which is evaluate the audit risk, but the examiner is not asking for utilize the analytical procedures, then I simply divide the total marks for 2. And when I simply divide the total marks for 2, I get 9 audit risk because the first question requirement is not asking utilize the analytical procedures. So I will take the full marks and divide them by 2. So I have to write 9 audit risk. So I will not show the table in the first requirement, right? I will only show the table in the second requirement. Okay, now let's try to understand a very realistic question on audit risk, which will give you a real temperament of how to go down with writing an audit risk. This was just a scan of the requirements, right? So that you understand the requirement 1 and you understand the requirement 2 and you understand the marking scheme, that how you allocate marks to the requirement 1 and how you allocate marks to the requirement 2. Okay, let's go down with the realistic question. Now the question we have to practice on the day 1 is basically the December 15 exams. And the question number 1. And I will be doing it as realistically as possible, and you have to concentrate. And again, please, you have to control your questions, right? Either I can concentrate on your questions or I can concentrate on attempting a question. So I think it's appropriate that for next half an hour, you just concentrate on what is happening, because a lot of your questions can be mitigated in the next half an hour, or a lot of your questions can be mitigated in the next 1 hour. So you have to give some time, right? Because either I can just sit and look at the screen and start answering your questions, or I can put a proper drill on the audit risk. So please focus on what I am doing now for the next half an hour, and I will give you a question answer break in which you can ask your questions, and I can then appropriately reply to each of your questions. Okay, let's go down with this question in front of your screen. See, this is just like the new paper format. It is still an email because this is an old paper format, but more or less there are too much similarities, right, between how the new paper format looks like and how the old paper format look like, because the only thing changed is that the choice have been eliminated. Now, if you look at this question, it says evaluate the audit risk, right? So the first requirement of the question that is to evaluate the audit risk, right? And the marks given are 18. So we have 18 marks to evaluate the audit risk. Then the examiner says in A2, recommend the additional information which would be relevant in your evaluation for 5 marks. And then in the B part, the examiner says, explain the principal audit procedures to be performed. The procedures to be performed in respect of the valuation of work in progress is of additional information. One requirement is for procedures. And there are marks allocated, and we have to write a briefing note. We have to write a briefing note, right? Okay, let's see how to go down structuring this answer properly and then start filling the answer. Now I have to write this briefing note to the manager, sorry, to the partner from the manager, because the email has come to the manager from the partner regarding audit planning Dali company. So I have to reply back to the email. So I have to use the same format. So I will say to from regarding. Okay, let me take the Word file and let's start writing the proper answer. And please concentrate on each and every point I'm raising so that you have a very clear illustration of how to write a proper answer. Okay, let's put the question number here. This is December 2015. Question number 1, and you have to prepare a briefing note. Okay, now in front of your screen, if you can see the Word file where I'm starting to write the December 15 question, I have to make a briefing note, and you have to understand how to make it because that's also the requirement of your new paper format. Briefing note to, briefing note from, and regarding. Now it's to whom? It's to the audit engagement partner. The name of the audit engagement partner is Sam Hockney. So audit engagement partner Sam Hockney. Okay, let's write that. To the audit engagement partner Sam Hockney. It's from the audit manager, no name given of the audit manager, so it's simply to the from the audit manager regarding. Let's see what's regarding is regarding audit planning Dali company. So regarding audit planning Dali company. Then, because you're writing a briefing note, so you will write the introduction. Now, introduction is basically the objective of writing the briefing note. Now, we had three objectives, right? One objective was to evaluate the risk. Second was to recommend the additional information. And third was to recommend procedures on the government grant and the work in progress. So, introduction is the purpose of writing this briefing note. The purpose of writing this briefing note is to evaluate the audit risk, in planning the audit of Dali company, in planning the audit of the Dali company, along with additional information, along with additional information needed to perform work. Further, this briefing note, further, this briefing note, further, this briefing note also includes procedures on government grant, first procedures on work in progress, and on the government grant. So you wrap up the introduction, right? So you wrote the introduction. Now, once you wrote the introduction, you have to come down with the first heading. The first heading is audit risk, evaluate the audit risk. So I will give the first heading, which is audit risk. Now let's try to identify audit risk. I have 18 marks, so I have to identify 9 audit risk. Okay, let's start reading the case and let's see how can we identify 9 audit risk from the case study. Okay, so you are also learning the format of a briefing note, right? Which you have to use in the new paper format, which is now worth 50 marks, the first question. So I'm presenting the way you should be writing the briefing note. So I hope you're learning the rules as I'm typing the briefing note. That is exactly what you have to do in your exam hall in September. Okay, let's go down, starting to identify audit risk. Okay, you are a manager in the audit department of Mondrian and Company, a firm of chartered certified accountants. You are responsible for the audit of Dali Company, a listed company specializing in the design and manufacturing of equipments and machinery used in the quarrying industry. Now, obviously, it is a listed company, right? So a listed company have a risk of management bias because a listed company can manipulate results to show a better performance to shareholder. So this is a listed company, right? And generally, the risk of creative accounting, the risk of creative accounting is higher in a listed company. The projected financial statement for the 2015 year recognized revenue of 138 million, profit before tax of 9.8 million, and the total assets of 90 million. Now we know examiner do give us these numbers to identify the materiality. Dali Company became listed in its home jurisdiction on 1st of March 2015. So the company has become listed for the first time, right? The year end of the company is 31st of December 2015, and the company became listed on the 1st of March 2015. So that means the company became listed during the year and is hoping to achieve a listing on a foreign stock exchange in June 2016. And they are hoping to achieve yet another listing the next year. So they got listed in the home jurisdiction and they now want to get listed on a foreign stock exchange the next year. So see how important this risk is. We go down and start writing the first risk, a listed company, and see how you write under it. Dali has become a listed company in the home jurisdiction. Dali has become a listed company in the home jurisdiction, which increases the risk of management bias in manipulating results to show better performance to the shareholders. Dali has become a listed company in the home jurisdiction, which increases the risk of management bias in manipulating results to should show better performance to shareholder. Moreover, the company, moreover, the company intends. Moreover, the company is hoping, moreover, the company is hoping to get a listing on a foreign stock exchange, on a foreign stock exchange, which increases the risk of creative accounting, which increase the risk of creative accounting, which further increases the risk of creative accounting in the financial statements. Now you have to make an impression, so you will say the revenue of the company, the revenue of the company has increased by how much? The revenue of the company has increased from the last year. How much revenue of the company has increased from the last year? You need to participate when I will be asking the percentages from you. The revenue of the company has increased by, okay, the revenue of the company has increased by 2.2% over the last year, and the profit of the company has increased by, and the profit of the company has increased by, and the profit of the company has increased by 6.5%, and the profit of the company has increased by 6.5% over the last year, indicates such risk exist. We know that the risk in revenue is overstatement, right? And the risk in profit is also overstatement. So revenue has increased from the last year, right? And the profit has also increased from the last year. It could be possible that the increase is due to manipulation, or the increase is due to creative accounting, or the increase is due to the management bias. So the percentages have increased right from the last year, and we know that revenue has a risk of overstatement and profit has a risk of overstatement. So the revenue of the company has increased by 2.2% over the last year, and the profit of the company has increased by 6.5% over the last year, indicates such risk exists. Now you change a paragraph. You already got your 2 marks. You already got your 2 marks here. Now you change a paragraph and you start writing a further new paragraph, which will give you further 2 marks. Yes, the increase is not significant, but what if the increase itself is misstated? What if the 2.2% increase should have been a fall of 2.2%, and the management has manipulated and shown it as an increase? So how can we trust management? When we are attempting a question on risk, we need to be skeptical. We need to have a negative mindset. And the negative mindset is very, very important to survive a question on risk. Now you change a paragraph and you write your further risk. Being a newly listed company, the management of Dali would have less knowledge, would have less knowledge about financial reporting standards. Would have less knowledge about financial reporting standards applicable to listed company, such as IS 33 and IFRS 8. Being a newly listed company, the management of Dali would have less knowledge about the financial reporting standards applicable to listed companies such as IS 33 and IFRS 8, because obviously when you do something new, you have less knowledge. So they have less knowledge of IS 33 and IFRS 8, which could increase the chances of misstatement, which could increase the chances of material misstatement, in the application of the relevant financial reporting frameworks. Relevant financial reporting framework. You got your other 2 marks. So when the company is listed, there is a risk of creative accounting. But this was a newly listed company. So then we have a second risk, that what if the company is less aware of IAS 33, because they will be applying IAS 33 for the first time, and they will be applying IFRS 8 for the first time. If that is applicable, there is a risk that the management does not know to apply them, and they do mistakes in the application. So listed company was such a potential paragraph at the beginning of the case study. Now you change the paragraph, and let's start reading ahead. Okay, now let's go back and start emphasizing on the next paragraph. Now I have completed the first paragraph, so I will now start reading the question from the background. DALI was established 20 years ago and has become known as a leading supplier of machinery used in quarrying industry, with its customer operating quarries which extract stone used mainly for construction. Its customer base is located in the country of incorporation, but most of the components used in Dali company's manufacturing process are imported from foreign supplier. So Dali company imports raw material from the foreign supplier. So we are finding another accounting risk. Dali company imports from foreign supplier. Import from foreign supplier. Now we will tell examiner, because the company imports from foreign supplier, the company should recognize the the purchases the company should recognizes the purchases at the spot rate. The company should recognizes the purchases at the spot rate, whereas the the trade payables at the year end should be recognized at the closing rate. Should be recognized at the closing rate. If the company uses wrong exchange rates, it could over or understate the purchases. Trade payables, and the exchange gain or loss. So the company should recognize the purchases at the spot rate, which is the accounting treatment, right? And the trade payables at the year end, which is the accounting treatment. If the company uses the wrong exchange rate, that's the risk. It could over or understate the purchases, trade payables, and exchange gain or losses. The company was importing from the foreign supplier. Okay, then the next one. See my phrasings of paragraph, right? Yes, because Zainab, we should not be mentioning the accounting standards, right? That means you are underprepared for exam paper. You have not read the examiner article on accounting issues. If you would have read the examiner article on accounting issues, you would not have raised this question that you're not mentioning the standards at all. Because if you have read the examiner article on accounting issue, it says quoting the reference number and quoting the title of an accounting standard does not carry marks. So I hope you have not read the accounting issues article of the examiner. You still have time till Monday to read it. Okay, then going back, the machines and equipment made by Dali are mostly made to order in the company's 3 manufacturing sites. Customer approach Dali to design and develop a machine or a piece of equipment to their needs, where management consider always audit risk includes the risk of material misstatement and the detection risk. You are putting a very strange question when you have exam on Monday. You are saying these are risk of material misstatement. Where is the audit risk? Audit risk includes the risk of material misstatement and then the detection risk. We have not yet found a detection risk, but we have found the risk of material misstatement, which is part and parcel of audit risk. A very strange question, right? Considering you have exams on Monday, and that shows how much prepared you are for exams on Monday. Okay, so where management considers the design work to be significant, the customer is required to pay 30% in advance, and the remaining 70% is paid on delivery of the machine to customer. Now, see, there is a big risk of revenue recognition. The customer is required to pay 30% in advance, and the remaining 70% is paid on the delivery of the machine. So there is a big problem with revenue recognition here, that how you treat the 30%, because the 30% is coming in advance, the 70% is coming, the 70% is coming when the performance obligation has been met. So the performance obligation has been met when 70% is being paid. So let's write this next point. The next point is payment in advance. The customer 30% payment is in advance, right? So that's the next risk, payment in advance. The 30% payment, the 30% payment received in advance from the customer should be recognized, should be recognized as an unearned income, as an unearned income. 30% payment received in advance from the customer should be recognized as an unearned income because the performance obligation is yet to be met, because the performance obligation is yet to be fulfilled. If the company recognizes if the company recognizes the 30% advance payment as its revenue, as its revenue, if the company recognizes the 30% advance payment as its revenue, it could overstate the revenue and the profit. It could overstate the revenue and the profit. So the 30% advance payment, right, is an unearned income because we have not yet met the performance obligation. The performance obligation will be met when the machine will be delivered, right? Yes, unearned income is basically the deferred income, right? So you should be recognizing the 30% payment as a deferred income, as an unearned income. But if the company recognizes the 30% advance payment as a revenue, it could overstate the revenue and the profit. Okay, the next point. Right, typically a machine takes 3 months to build, right? So 30% payment is received in advance. If I receive a 30% payment in advance at the year end and I record it as my revenue, my profit will be overstated. Okay, then comes the notes from the meeting with Dali company. This year was been successful from a strategic point of view in that Dali company achieved a stock exchange listing in March 15. We've already covered that, right? And in doing so, raised a significant amount of equity finance. So the company became listed and they raised a significant amount of equity financed. The company's corporate governance was reviewed as part of the flotation process. The company's corporate governance was reviewed as part of the flotation process, resulting in recruitment of 3 new non-executive directors. New. The new is very important here, right? Because anything which is new carries risk. 3 new non-executive director and a new finance director. So company has overhauled the corporate governance. They have brought 3 new non-executive directors. They have brought 3 new non-executive directors and a new finance director. So let's write that point. New non-executive directors, new non-executive directors, new non-executive directors, and finance director. I'll write 2 paragraphs under this, right? One for non-executive directors and one for finance director. Both of them are new. Now I will tell examiner that the introduction of the non-executive directors, the introduction of the non-executive directors, the introduction of the non-executive directors will strengthen the governance of the Dali company. However, as the NEDs are new to the business, to the company, they will have less knowledge. They will have less knowledge of the business policies. They will have less knowledge about the business internal control system. They will have less knowledge about the business internal control systems and process. Therefore, the oversight, the oversight of the NEDs could be weaker, in initial months of joining the company. This is a very short-term risk, right? The NEDs are new. They will take some time to settle in the company. They will take some time to know about the company. So in the meantime, the monitoring will be weak. Therefore, the oversight of the NEDs could be weaker in the initial months of joining the company, which could increase the chances of material misstatement in the financial statement, which could increase the chances of material misstatements in the financial statement. That is 2 marks. Then I go down and I start to write about the finance director. The new finance director is basically responsible to oversight the financial statements, However, in the process of the case, the new finance director, see this point I'm writing, right? However, in the process of the case, the new finance director has taken number of wrong decisions pertaining to accounting matters. If you must have read this case, right, many times before. In this question, the finance director have taken a lot of wrong decisions, which will come on the page 2. So we are saying the new finance director has taken a number of wrong decisions pertaining to accounting treatments, thereby raising concerns on his competence. See, we can never say the finance director is incompetent. But in this question, the finance director took some very wrong decisions. He does not even know the simple accounting rules. So that means that the new finance director has taken a number of wrong decisions pertaining to the accounting treatment, thereby raising concerns on his competence. due to incompetence, due to this, there could be number of material misstatements. There could be number of material misstatements within the financial statements. This is case oriented answer, right? This is case oriented answer because he took the wrong decisions. It is putting a question mark on his competence. So due to this, there could be there could be a number of material misstatements in the financial statements because he is new and he's demonstrating a lack of judgment. He's not taking the proper judgments. So we're taking another 2 marks of emphasizing on the finance director. So far we got 2 marks for FD, 2 marks for NEDs, 2 marks for payment in advance. That's 6 marks. We got 2 marks for import from foreign supplier, 8 marks. We got 2 marks for newly listed company, 10 marks. And we got 2 marks from Dali is a listed company, 12 marks. So we are still 6 short of our agenda. Now that is completing the first page, right? I'm just completing the last point and then we are taking the break, right? The last point on the first page says, in March 2015, a cash settled share based payment plan was introduced for the senior executives. Now see, there is another risk of management bias. Before we come to IFRS 2, there is a risk of management bias. There is a cash settled share based payment plan. So do the directors will the directors be motivated in increasing the share prices? Will the directors be motivated to increase the share prices? Because there is a cash settled share-based payment plan. So is there a risk of management bias because the senior executives will be manipulating the financial statements to boost the share prices? So see, one risk is of IFRS 2, right? And one risk is of the risk of management bias. So cash settled share-based payment plan. So let's write that. Cash settled share-based payment plan. There is a risk of management bias. There is a risk of management bias in manipulating results. There is a risk of management bias in manipulating results to show, to boost the share prices, to boost the share prices. There is a risk of management bias in manipulating results to boost the share prices as the executives have recently been awarded, recently been given the share options, have recently been given the share, have recently been given, have recently been given a share-based payment plan as the company has recently introduced a share-based payment plan for its executives. There is a risk of management bias in manipulating results to boost the share prices as the company has recently introduced a share-based payment plan for its executive, which increases the likelihood, of creative accounting, which increases the likelihood of creative accounting to show better profits and to show better profits. Full stop. This is a very journal risk, right? They will be getting bonuses based upon the performance. They will be getting they need to they will have an incentive, right, to manipulate the share prices. And then comes the journal risk, then comes the accounting risk. See what is written in the accounting risk. It says, on the advice of the newly appointed finance director, no accounting entries have been made. On the advice of the newly appointed finance director, on the advice of the newly appointed finance director, no entries have been made in respect of the plan. So we have not recorded the payment plan. We have not recognized the expense and we have not recognized the liability. So have we done the biggest mistake being a finance director? So no accounting entries have been made. No accounting entries have been made in respect of the plan, which means that the expenses are understated and the liability, it is a cash settled share based payment plan, right? And the liability is understated and the profits are overstated. And the profits are overstated. The company should recognize the company should recognize expense each year. The company should recognize expense each year, taking into account taking into account the fair value taking into account the fair value of the shares at the year end, which is how much? What is the share value? They offered them at, okay, the amount of the bonus will be based on increase in the share prices from that at the date of flotation when it was $2.90 to the share price at 31st of December 2017. So you should be recognizing the, yes, currently it is 3.5, right? That is given in the last paragraph. Currently the share price is 3.5. So we should be recognizing, the company should recognize the expense each year, taking into account the fair value, uh, taking into account the fair value of the shares at the year end, which is $3.50. So company didn't recognize an expense at all. They should have taken they should have taken the fair value at the year end, and the fair value at the year end is $3.50. No, 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 Arab Sultan. It should be recognized on the grant date is the equity settled share based payment plan. This is a cash settled share based payment plan. So for a cash settled share based payment plan, you have to take into account the fair value at the year end. So what the accounting treatment you are mentioning is for an equity settled share based payment plan. I am writing an accounting treatment for a cash settled share based payment plan. So management has not made any accounting entries, right? So that is the biggest blunder on part of the finance director. So we are very clear what is understated. Okay, I'm now taking a break. These two risks here has given me another 4 marks. One is a very general risk of a management bias, and one is a very specific risk of IFRS 2. Okay, I'm taking a break for approximately 10 minutes, and after 10 minutes, I will be starting the class back, and I will be focusing on the remaining part of the question. And then in the last 15 minutes of the session today, I will be looking at your question and answers. I will be looking at your questions to respond to them. Okay, take a break for 10 minutes and be back into the session at 10:10 p.m. Pakistan Standard Time. Okay, welcome back after the break. Let's resume back with the question we were doing, December 15, question number one. We have almost reached the second page, and we've already covered the paragraph till the cash settled share-based payment plan. Okay, if you now look at the next paragraph, it says the finance director recommended that the company's manufacturing site should be revalued, which is very good. An external valuation was performed in June 2015, resulting in a revaluation surplus of $3.5 million. For the first time, we saw a value in the question, right? So we should determine the materiality wherever we find a value. So the revaluation surplus being recognized in equity is $3.5 million. And revaluation surplus is a balance sheet item, right? So we will be dividing it by the total assets of the company. So $3.5 million is the revaluation surplus, and the total assets of the company are $90 million. So $3.5 million divided by the $90 million. How much is that? 3.8%. Okay, that's good. Hold the answer. Okay, one student is saying 4.9, one student is saying 3.8. Okay, 3.8 is a valid answer. Okay, so revaluation surplus is 3.8% of the total assets. The finance director has informed the audit committee that no deferred tax needs to be provided in respect of the valuation because the property is part of the continuing operation and there are no plans of disposal. That is yet another wrong decision of the finance director. When you revalue the property, it give rise to a taxable temporary difference. And because of the taxable temporary difference, you should recognize a deferred tax liability. So the finance director is saying there is no need to recognize a deferred tax liability. There is no need to recognize a deferred tax liability. So the wrong thing in that paragraph is not the revaluation. The company did the revaluation, but the company didn't recognize the deferred tax liability which they should had because of the taxable temporary differences. So let's start writing this answer now. This time there would be a change in the way we write the answer. Revaluation. Revaluation. Now this is the first time we found a value, so we will be telling examiner the materiality. So let me emphasize this. The revaluation surplus of dollar, how much was the revaluation surplus of dollar? 3.5 million. Of dollar 3.5 million is 3.8% is 3.8% of the total assets, thus material to the financial statements. So the revaluation surplus of $3.5 million is 3.8%, which is material to the financial statement. After the full stop, this is the first time we use the line of materiality because if for the first time we found a percentage or we found it, right? So $3.5 million. Okay, after the full stop, you say the revaluation give rise to a temporary difference, taxable temporary difference between the tax base of the asset, and its carrying value, between the tax base of the asset and its carrying value. It gives rise to a taxable temporary difference between the tax base of the asset and its carrying value, for which a deferred tax liability should be recognized, for which a deferred tax asset should be recognized. Now, then you will criticize for which a deferred tax liability should be recognized. As no deferred tax liability is recognized, as no deferred tax liability is recognized due to the wrong decision of the finance director, due to the wrong decision of the finance director, thus the deferred tax liability is understated, is understated. And please, there are loads of questions coming in, some relevant, some irrelevant. If you have a relevant question, please, you can use the WhatsApp group to raise in your questions. So please post your relevant queries on the WhatsApp group if you want them to be answered, because during the live session, it's very difficult to respond to your queries, and particularly when there are loads of queries coming in. So please ensure that you post your queries on the WhatsApp group, your specific queries, so that they can be responded effectively. Okay, now after the revaluation, we got another 2 marks, right? And you continue. In July 2015, a grant of a $10 million was received. A grant of a $10 million was received as part of the government scheme to subsidize the company. Now, for the second time, we got a value. A grant of a $10 million was received. So a grant of a $10 million was received. So we'll divide it by the total assets. The total assets of the company were $90 million. So a grant of a $10 million was received. How much is that of the total assets? The grant was received, the government grant. How much is the government grant? 11.1%. Okay, fine. Again, let me take it in blue to highlight something. The government grant received is $10 million, which is 11.11% of the total assets, thus material to the financial statements. Full stop. Now again back to black. Now let's see what the company have done with the grant. Specifically, $2 million of the grant compensate the company for the wages and salaries incurred. So these wages and salaries have already been incurred. So $2 million grant, the $2 million grant can be recognized as an income, right? Because the expense has already been incurred. But the remaining grant has a condition that with the condition of the grant being that the manufacturing site in that area will remain operational until 2020. So $2 million grant can be taken as an income because we have already incurred the expense, but we cannot take the $8 million grant as an income because it has not yet been the condition has not yet been fulfilled. So we need to recognize the remaining $8 million grant as a deferred income over the 5 years. So the risk is with the $8 million grant, right? That what if we record the $8 million grant as an income, it will overstate the profits and understate the deferred income. So let's write the risk here. The $2 million grant, the $2 million grant should be recognized as income because the should be recognized as income because the related expense to which it relates has already been incurred. So this grant relates to an expense, right, which has already been incurred, but the risk is with $8 million grant. However, the remaining $8 million grant, the remaining $8 million grant should be treated as deferred income over the next 5 years. Over the next 5 years, there is thus if $8 million, if $8 million is recorded as income immediately, it will overstate the profit and will understate the liabilities, or will understate the deferred income. Another 2 marks. Okay, I'm not writing more risk after this because that was a way to tell you how to draft the risk. Now, want to do something different with you in the next half an hour of this session. Now, see how I wrote the risk. I used a para with the heading, and every para was unique. And if even within one para, if even within one para, even within one para, I wrote 2 unique points, so I used 2 unique paragraphs. See, you can see the cash settled share-based payment plan. It has 2 unique paras because I was taking 2 unique points. So let's get down with last thing. I'm not reading the narrative, right? You can read the narrative. I'm looking at the numbers. See the numbers given. Now, the good thing the examiner has done here is the examiner has given the ratios and the percentages himself. I can be clever in the exam to use them. Examiner is not saying utilize the analytical procedure, but the examiner is giving me some results. I can identify the risk from the results. The operating profit margin has increased from 13% to 15%. And we've already seen that the share-based payment expense was not recorded. So operating profit margin can be overstated because the share-based payment expense was not recorded. So the company is saying that the operating margin is 15%, but we have not recorded the expense. We've not recorded the share-based payment expense. So can we tell examiner that the increase in the operating margin could be overstated? So let's go down and find risk from numbers. Operating margin, sorry. Operating margin. The operating margin has increased from 13% to 15%, which could be misstated because the company has not recognized the expense related to cash settled share based payment plan. So the OM has increased from 13 to 15, which could be misstated which could be overstated because the company has not recognized the expense relating to the cash settled share based payment plan. So see, we connected the expense with OM. Then the second one, see how beneficial the numbers are. Inventory days have increased from 150 to 175. So that's another risk. Inventory days have increased from inventory days. Now, the increase in inventory days from a fill in the blank to a fill in the blank. Inventory days, the increase in inventory days from this to this indicates slow moving inventory, or indicates a slow moving inventory. The inventory should be valued at the lower of cost or NRV. There is a risk of an inappropriate inventory valuation, particularly due to slow moving inventory. There is a risk of an inappropriate inventory valuation due to slow moving inventory. Thus, inventory could be overstated. See, we found another risk from inventory. Okay, then next we have receivable days. Receivable days are increasing from 70 to 90. We have another risk coming from exam paper. See how beneficial the numbers are. If the examiner would have asked you to utilize the analytical procedures, you could have shown the same table. See, the examiner is showing the table. That is exactly what the examiner likes you to do. That is exactly what the examiner likes you to do when he's asking utilize the analytical procedure. But in this question, the examiner has already given them. So receivable days have increased from 70 to 90. So I would be saying receivable days, and I will say the increase in receivable days, from 70 to 90 depict that the customers are struggling to pay on time. And I wrote that, right? I wrote that at the beginning of the session, right? The customers are struggling to pay on time. Thus, there is a risk of irrecoverable debts not properly recorded, which could overstate receivables and profits. See, I got three risks from numbers. Yes, the commentary is enough for 2 marks. What more I can exaggerate? Your commentary has to be complete and concise. It should not be vague. My commentary is not vague at all, right? My commentary is very specific, and my commentary is not vague. If my commentary is vague, I will not take 2 marks, but my commentary is very specific. See how many risks I found? I just need to find 9. I found risk from the accounting treatments. I found risk from the numbers given in the case study. I even found risk from journal statements like companies listed, the risk of management bias. Now, you have to give a conclusion, right? Because the question was saying evaluate. The question was saying evaluate the audit risk. Now, once you complete the evaluate of risk, you will wait because you have to give a conclusion at the end of the briefing note, right? You cannot give a conclusion in the mid of the briefing note. So after you write the audit risk, you have to write additional information, and then you have to write procedures. So if you're completing your briefing note, see how would you be completing your briefing note? You will then be changing the heading, and you will be writing the next heading, which is additional information. Additional information. I'll just be drafting that for you. Then after additional information, you will be writing the next heading, procedures. Then you will be writing the first procedure on, you will be writing the first procedures on work in progress. And then you will be writing the next procedures on government grant. I'm just making a skeleton, right, of the briefing note, the government grant. And once you end the procedures, now you have to write a conclusion. The conclusion has to come at the end of the briefing note, right? But the conclusion pertains to what? The conclusion pertains to audit risk, because the examiner was saying evaluate the audit risk. So let's write the conclusion. Now see, across my audit risk answer, I didn't identify any detection risk, right? But have I found many ROMM? Did I found many ROMM when I was attempting the question on audit risk? Is that true? Did I found many ROMM when I was attempting the question on audit risk? So see, can I give a conclusion now? I can give a conclusion. The audit, the financial statements of Dali company contains numerous risk of material misstatements, because I want to tell examiner that I'm attempting a question on audit risk. The financial statement of Dali company contains numerous risk of material misstatements. And the audit and the aud and contains numerous risk of material misstatement. Therefore, the audit should be properly planned. The audit should be properly planned to give focus to each risky area, to give focus to each risky areas there in order to reduce the detection risk, in order to reduce the detection risk to an acceptable level. See, I brought that detection risk in my conclusion. The financial statement of Dali Company contain numerous risk of material misstatement. Therefore, the audit should be properly planned to give focus to each risky area in order to reduce the detection risk to an acceptable level. See, now the examiner will know I have done a question on audit risk because there was no detection risk in the case study. There was no detection risk in the case study. So I brought the detection risk in my conclusion. But you have to give a conclusion right at the end of the briefing note. That is very, very important. So this is an illustration of the briefing note as well, right? And you have to write your answer in a format of a briefing note. Now, try to understand one thing before I discuss with you some very key concepts on audit risk, because audit risk is very important for September 18 exams. Your 4 professional marks are very important, right? You will get 1 mark for the format of the briefing note. So the format of the briefing note was what? The format of the briefing note was this. I put a heading briefing note, that was part of the format, to, from, regarding. Then I put a heading introduction, that was part of the format. Then I put headings in order. First heading was audit risk, followed by the second heading, which was additional information. Then the third heading was procedures, and the fourth heading was conclusion. That is the format of the briefing note, right? Then I will get 1 mark. There is 1 mark for the logical flow. The logical flow is A, B, C, D. See, I did the logical flow. I didn't break the logical flow. Examiner was asking audit risk first, so I wrote audit risk first, logical flow. Then the examiner was asking additional information, so I wrote it after. Then the examiner was asking procedures, so I maintained the flow that was given by the examiner. So the logical flow will give me 1 mark. Then the last thing, there are 2 marks for the persuasiveness of the answer. Persuasiveness of the answer. How persuasive your answer is? That means how impressive your answer is. Now that is very subjective. How impressive your answer is. If your answer is journal, your answer is not impressive. If your answer is specific, your answer is impressive. But again, impressive is a subjectivity, right? That will you be getting these marks or not? So that is the breakdown, right, of the 4 professional marks. Now something more important. When you're answering a question on audit risk in exam paper, when you're answering a question on audit risk in the exam paper, remember something very important. When you're answering a question on audit risk can be identified from number 1. Audit risk can be identified from where? It can be identified from journal statements. See, we identified audit risk from journal statements like listed company was a very journal statement. We identified audit risk from journal statement like new non-executive directors was a very journal statement. We identified audit risk from journal statement that was a new finance director. That was a very journal statement. We even identified audit risk from the risk. We even found some risk like risk of management bias. Now, risk of management bias is a very general risk, but each risk carries 2 marks, whether the risk is coming from a journal statement. How many times in this question we found a risk of management bias? We found new NEDs. Then we can find the risk from accounting treatments. How many times we found the risk from accounting treatments? We found the risk from accounting treatments relating to IS 21. We found the risk of accounting treatment relating to IFRS 2. We found the risk of accounting treatment relating to IS 12, deferred tax liability. We found the risk relating to IS 20. We even found the risk relating to IFRS 15. See how many accounting treatments were there. Then we even found risk from numbers. We even found risk from numbers, right? We even found risk from the operating margin. We even found risk from inventory days. We even found risk from receivable days. So see the risk can come from journal statements. It can come from accounting treatment. It can come from numbers. But you should know your target. And the target is very important, right? The target is the marks given. So examiner has given us how many marks? 18 marks. And we divided that by 2. So we know our target was 9 risk. So if you know the target, then you can look at the question and you can start identifying the risk either from the journal statement, from the accounting treatments, from the numbers. So in that context, 9 looks very less, but you have to write 9 good risk, 9 good risk, which is very, very important. Right now, just one last exercise I would like to do, because I will be picking the additional information and how you write additional information in my class on evidence and procedures, right? So when I have a day allocated to evidence and procedures, so when I will be giving you a practice of evidence and procedures, I will be giving you a practice of additional information. So wait for additional information. I'll be using the same question Dali company for writing the additional information. So I please keep in mind, please keep in mind, or okay, let's do one thing. Just to wrap it up, there is a requirement additional information in this question, right? And which has come many times in question number 1. Question number 1 contains additional information most of the time. Now see, the examiner is giving us how many marks for additional information? Only 5. There are only 5 marks for additional information. Recommend the additional information which would be relevant in evaluation of risk. Now we know additional information is something tangible. Information means the information you are taking from the management. So first let's make the rules. The rules of additional information are very important. Then I'll start linking that to the case. Try to understand this. Additional information. Please remember, the additional information also comes in a question 1, which is a question on risk, and it also comes in a question on due diligence, in a question on due diligence. But you should know how to write it. Now, there are some rules, right, with additional information. Let's make the rules. The first rule with additional information is information is equal to tangible. Information is equal to tangible is equal to management records. So the information I have to take is in tangible form, right? And the information I have to take is from the management, right? Information has to come from the case study. The information has to come from the case. So it has to be case specific. It has to be case specific. It cannot be generalized information. Information should have a reason. Why am I taking this information? Why am I taking this information? And the last thing, each information is equal to 1 mark, and they're written like sentences, they're written like bullets. 1, 2, 3, 4, 5. So these are the rules of information. Information has to be tangible. Information has to be case specific. Information has to be with reason. Information contains 1 mark, and information has to be written in like sentences and bullets. Now, knowing this, let's attempt a question on additional information, which is itself the Dali company question. Now, in Dali company question, we have identified so many risks, and it is saying additional information you need in evaluation of risk. Now, number one, additional information. This is how you write it in the exam paper, right? The audit firm, sorry, the following additional information, information, the following additional information should be obtained from the Dali company management, colon. See, what's the emphasis? The following additional information should be obtained from the Dali company management, because we need this information from the management. Number one, okay, will I be needing the government grant agreement so that I can verify so I can verify the terms and conditions associated with the grant? Because the government grant was a very specific risk in the question. So will I be needing the grant agreement to confirm the terms and conditions associated with it? So will I be needing the grant agreement? See, grant agreement is the information tangible to confirm. Now I'm writing the reason to confirm the total amount of the grant and the conditions associated with the grant received from the government. So it should have a reason, right? Okay, was revaluation another risk in the question? No, it's not like a procedure. Procedures would start with review the grant agreement. Procedure starts with a verb. Information starts with something tangible. So will I be needing the revaluation report to confirm the revaluation surplus and the adequacy of the revaluation surplus? So will I be asking management that I will be needing the revaluation report? So number two, I will be needing the revaluation report to confirm the assumptions, to confirm the assumptions taken by the valuer in to confirm the assumptions taken by the valuer to revalue the properties of the company, to revalue what was revalued in this question, properties or manufacturing sites, the company's manufacturing sites, right? The assumptions taken by the valuer to confirm the assumptions taken by the valuer in revaluing the manufacturing sites. So I will be needing the revaluation report, right, to confirm the assumptions taken by the valuer in revaluating the manufacturing sites, to confirm the adequacy, of the revaluation surplus. Okay, next. Hmm, did Was there a specific risk relating to the share-based payment plan? Will I be needing something like the minutes of the board to confirm the vesting conditions with the cash settled share-based payment plan? So will I be needing to confirm the conditions associated with the cash settled share-based payment plan? So will I be needing an information like the uh, any plan document, or any board minutes, plan document or any board minutes to confirm the conditions, to confirm the number of executives, to confirm the number of executives who were given the who were given the plan, and the vesting conditions associated with the plan. Yes, the board resolutions, right, to confirm the approval of the plan and the vesting condition of the plan. So what is the information? The information is the plan document or the board minutes. So see, you are taking the information from the case. The customers are struggling to pay 70 days, 90 days. Can I take the age analysis of the company to confirm how much should be the bad debts? Can I take the age analysis to confirm the number of bad debts, or how much should be the bad debts? So can I take the age analysis age analysis report to confirm the number to confirm the receivables to confirm the receivables who which to confirm the receivables overdue which are overdue for which are overdue and should be recognized as bad debts and should be recognized as bad debts. Okay. Will I be needing the inventory valuation report to confirm that the inventory was properly valued, because there was a risk with inventory? So will I be needing the inventory valuation report? Okay. I'll be needing the inventory valuation report to confirm to confirm that the inventory was valued accurately, appropriately. appropriately. See, I got five informations. Yes, Suraj, that is right, even what the answer you are giving, right? So see, there are five additional informations, 5 marks. But see what I have underlined. What I've underlined is the information. I hope you can see all the information are tangible. Can you pick all the informations are tangible? They're all the documents of the management. Grant agreement, revaluation report, plan document, age analysis, inventory valuation report. No, it's not the same as evidence, because evidence starts with copy of, results of, notes of, extracts of. They're not procedures. Procedure starts with verb, review, recalculate, analyze. Procedure starts with verbs, right? We have to do that in class. Evidence starts with copy of, results of, extracts of. But information has to start from information. So the emphasis of the information is information. And after the information, you have to write to confirm. So to confirm is coming after. See, I have written the reason, right? The reason is very important. So are you understanding? the way this answer was presented, first of all, this answer has demonstrated the professional marks. This answer has also demonstrated how you write an audit risk answer. This answer has also demonstrated to you how you write additional information, right? And this answer has also demonstrated that you have to write a conclusion, right, at the end of the briefing note. Right now, you need to practice more questions on audit risk. I have given you some home assignments, right? The home assignments includes the June 15 question number 1, and the home assignment includes the June 17 question number 1. I would like you to do them on the same format. And I think one of the question, which is June 17, that includes utilize the analytical procedure. And when the examiner says utilize the analytical procedure, you have to give a table of analytical procedure, just like the examiner was giving in the December 15 question, like this. See, examiner was giving two columns, 14 and 15, and the examiner was giving results. That is exactly the way you have to present the results in exam paper. So see the December 15 paper in front of you. So this is exactly the way you have to present them in exam paper. Examiner did it for you, but examiner can ask you that you do it. So please remember that whenever the examiner asks you utilize the analytical procedure, you have to you have to deduct 5 marks for it. And I've also shared some of my suggested answers. You must have seen them as a document which must be shared with you by ACCA, that there are suggested answer techniques given to you as well. So there are suggested answer techniques how to write it. I've given that handout, and that handout must have been distributed to all of you. It must be there in the handout section of the webinar as well. You can download it from the handout section. Okay, now that means in terms of the audit risk today, we have got to know how to identify the ROMM, and we have got to know that when the question is silent, how do we identify the detection risk? So we wrote the detection risk in the conclusion of the answer. Marking scheme was given to you. I have given you the marking scheme, that when will you utilize the analytical procedure, what will be the marking scheme? And I've also given you the marking scheme when there is no utilization of analytical procedure. I have given, I have been very specific when I was writing my risk. For every risk, I was writing the impact of risk. I cannot end my risk without impact. In all my drafting, you must have seen either I was saying financial statements are materially misstated, or I was saying something is understated, something is overstated. So I cannot write a risk answer without an impact. And you need to make an impressive answer. And how can you make an impressive answer? You have to make it specific to the case, specific to the case. Right now, we are meeting tomorrow for the day 2 agenda, which is on evidence and procedures. So in the class tomorrow, I will be doing the practice question, June 2017, question number 4, and I will be using the June 17 question number 4 as an illustrative question to demonstrate how you write evidence. And a lot of students were still confused between evidence, procedure, and evidence, procedure, and information. You will get to know the difference in the class tomorrow. Right, so please join the session tomorrow for understanding the difference between evidence and procedure, and also I'll be linking evidence, procedure, and additional information so that you have a clear track of how different the three are in exam paper. So we'll be using the June 14 question number 4. Okay, now I have 5 minutes so I can look at some of your questions to respond to them. And secondly, You can utilize the WhatsApp group for raising your specific inquiries. And please do read the recent articles of the Examiner, right? The recent articles of the Examiner are very, very important. If I can just show you that so that you have an emphasis on them. If I just show you the articles which you must be going through, see how easy that is to reach the articles. Just take hardly 2 seconds, and most of the time student does not explore this valuable resources provided by ACCA. So technical articles is such a valuable resource which students are not using. See this? Can you see these articles? Exam technique. These are all exam techniques article. Exam technique article part 1, ethics. So what is a good answer in ethics and what is a bad answer in ethics? You will get to know from that. Risk, see the part 2. See the part 2, risk. What is a good risk answer and what is a bad risk answer? You will get to know from this article. Please do read these articles. You still have time till Monday. See, there is a third article, accounting issues. Part 3, how to write an accounting issue, how to write a treatment in the exam paper. And this is the article where examiner has very clearly written in the accounting issue article. See this accounting issue article of the examiner. The examiner is saying, see what is the examiner saying here. See this first read this line very carefully. Written by the member of the P7 examining team. I hope now you can trust the language statement given. See this, what is the examiner telling you? See this, directly from the ACC website, directly from an examiner answer, directly from an examiner article. Now you have to trust it. It says no credit is awarded for the name or number of the auditing and the financial reporting standards. Now you cannot ask me question on this anymore. This is something I've been telling for the last 5-6 years to my students, that there is no credit for the name and number of the auditing standard and for the financial reporting standard. Examiner only write it because the examiner answer is a tutorial guidance. Examiner answer is a guidance. So in a guidance answer you can write it, but in the exam standard, the P7 examining team is saying you cannot write. You should not write it because there is no credit for it. Now, I hope you trust this article and you trust the author of this article. I believe you are not reading these articles. ACCA has given you so good resources on exam techniques. But if you are not using those resources, rather you are using an XYZ resource, then you're not preparing yourself effectively for exams, right? Okay, let me go back to the website. See part 3, see the part 4. The part 4 is on procedures. How to be good on procedures. This has been updated just yesterday. Just 24 hours ago, this article was updated. How to be good on audit procedures. So if you think you're bad on audit procedure, please read this article before Monday. And then there's the last article, how to be good on reporting. How to be good on reporting. 5 articles focusing on how to be good, and 5 articles telling how a student do bad. So if you read these 5 articles, they can be amazing for your exams on Monday. They cover all the core areas, right? Procedure is a core area, reporting is a core area, accounting issue is a core area, risk is a core area, and ethics is a core area. So please use these resources. ACC has given these resources for you, not just for a tutor. Right, that is it for the session today. I hope you had a good session and you must have understood some of your weaknesses throughout the session today, because the purpose of these practice to pass sessions is to give you insights to your weaknesses, which you must be doing in exam papers and struggling to pass them. So I'll be meeting you tomorrow again, the same time, 8:30 p.m. the Pakistan Standard Time. And the agenda for day 2 tomorrow is to start working on evidence and procedures. Best of luck for your exams on Monday, and I hope you're preparing yourself effectively for your exams. And please ensure whatever has been taught to you, you are effectively implementing them in your exams, which is just a week away from now. Okay, it's time to say you goodbye and time to sign off the session, and I'll be meeting you tomorrow. Goodbye and Allah Hafiz.